Let's take a look at the first thing that you should know about futures trading. And everyone who trades futures know that the reason why most of traders trade futures market is because they want to get leverage, right? And leverage is basically a double-edged sword. We have little money, but we want to make as much as possible as soon as possible. And of course, we always see the positive side of making as much as possible, but we don't see at the flip side of it, which is you can also lose a lot of money and basically lose everything in a short period of time. So leverage is something that may kill you, and it may also definitely help you. So we need to know how to basically work on the leverage. So let's take a look at some example over here. Right? Let's say you have a 5,000 ringgit capital, okay? And if you trade FKLI is basically the KL Composite Index Futures, and I'm just rounding up the figures. Let's say the KLCI futures now is at 1,700 points, and in FKLI, right, 1 point is equivalent to 50 ringgit. So that means if you are trading one contract at 1,700 points, the contract value is 85,000 ringgit. Now you only have a 5,000 ringgit capital, but you'll be trading 85,000 ringgit worth of a futures contract. Right? So here you are having about 17 times leverage. Now leverage means if the index, if let's say the FKLI moves 1%, okay, then your capital will move about 17%. So it moves 17 times. Now let's say you long one FKLI contract. Now in futures contract, when you're long, it means you are buying. You are expecting price to go up. Okay, and you long one FKLI contract at 1,700 points. Now let's say the FKLI declined 50 points to 1,650 points. That means you're going to lose 50 points. And if you take 50 points, you multiply by 50, that's basically you're going to lose 2,500 ringgit. Okay, and 2,500 ringgit from your 5,000 ringgit capital, that's 50% of your capital, right? So if the index just move against you 50 points, you'll lose half of your capital. Now, if you have a capital, let's say about 20,000 ringgit, and you'll be trading one futures contract, this will give you about 4 times leverage. And if you long one futures contract at 1,700 points, and let's say the KLCI declined 50 points, and you're still going to lose 2,500 ringgit. But because your capital is 20,000 ringgit, that's going to be like only 12.5% of your trading capital. So the more capital that you put in, the lower leverage that you're going to have. And I'm sure that most of the traders, they would like to have as high leverage as possible, because again, they want to make as much money as possible, but you also have to consider the downside of it. So the key here to basically manage leverage is to find a leverage that you can manage, that you are able to absorb, that you are able to comprehend. Right? You have to manage the leverage by determining the right capital. So if you want a lower leverage and you think that you do not want to have very high volatility on your capital, then you should be trading at lower leverage. And by that means you have to increase your trading capital. So don't just try to get the highest leverage as possible, because especially if you're a beginner, right? Because leverage, if you do not know how to manage it, it can bust your account. If you really know how to manage it properly, it can help you to increase your capital as much as possible in a short period of time. So that's the first leverage. That's the first thing that you must know about futures trading. This is about managing leverage. Okay, we're gonna go move second one. Okay, second thing is we have
at my website you'll find online financial seminars, which is I call webinars. I do it regularly, and also a lot of online investment and financial courses, which is conducted solely online. So I'll be waiting for you at my website at KCLau.com. I wish you have a great day. Hope to see you soon. Bye bye.